Hello, everyone. Matt Clark, research analyst for Money and Markets here with a special marijuana market update. My team and I really hope you're getting ready to enjoy this holiday season. And whether you're traveling or staying at home or whatever you might be doing, we just hope that you stay safe. Now, we've had an interesting year when it comes to the cannabis market. The industry seemed destined to continue downward from a disastrous 2019 until the coronavirus. Now, from March of 2019 to March of 2020, the Alternative Harvest ETF trades on the New York Stock Exchange under MJ dropped more than 71%. Now, MJ is an exchange-traded fund that tracks some of the biggest cannabis companies traded on the market. But then from the onset of the coronavirus in March of 2020, states locked down. Millions of Americans were either laid off, furloughed, or forced to work from home. But that seemed to give the marijuana market a bit of a boost. Sales started to climb as dispensaries switched gears and allowed for curbside pickup. The industry was further boosted by the election of Democrat Joe Biden as president. Investors kind of saw this election as a potential lead-in to federal legalization of adult-use cannabis. Now, that hasn't happened yet, and it may not happen anytime soon, but it is a bright spot. So 2020 started slow for the cannabis industry, but it's poised to end on a high note leading into the new year. Now, remember, I told you about that drop from March 19 of March 20. Now, since that March drop of 2020, the ETF has moved nearly 57% higher, erasing half of its 2019 losses. Now, with that, we wanted to present some highlights from the marijuana market update over the past several months. Now, no analyst or target or trader can really get it right 100% of the time. We know this. But we use tools like Chief Investment Strategist at a Modell's six-factor green zone rating system to help us get it right most of the time. And that was the case when we covered companies like Aurora Cannabis, Cresco, and Curaleaf. Now, we hope you enjoy revisiting these clips as much as we did making them. And please, if you followed any of this advice, write in or leave a comment down below and let us know how you did. Again, my team and I hope that you have the happiest of holidays, and we look forward to providing even more information, safe and sound, profitable advice, and analysis in the cannabis market in 2021. Now, as for the cannabis business itself, Election Day was a good day. If you remember in a previous marijuana market update, I mentioned that New Frontier Data, a cannabis research firm, found that if all those measures passed, it would collectively add $9.3 billion in revenue to the legal cannabis market through 2025. Well, guess what? They all passed. So if those projections are true, you'll see the cannabis industry could reach a revenue of $38.3 billion by 2025. You can see the practicality of states implementing adult use laws to generate revenue. It's a great way. There's not much argument in terms of taxes. I think, cannabis companies and users know they're going to get taxed to use it. So there's really not much argument there. So passing that kind of a tax doesn't put a lot of political pressure on state lawmakers. And I think that's exactly what you're going to see out of states like Pennsylvania, New York, Maryland, Connecticut, and New Mexico. And I think they're going to do it in fairly short order. The bottom line is if you're really considering Aurora Cannabis as an investment, don't. There are just too many red flags for me at this point to make it a viable investment option. Now, I know there's going to be some sentiment to buy on a dip, and that's fine if that's your investment strategy. Unfortunately, I just don't know that this is the lowest that Aurora Cannabis is going to go. I just don't see a sustained uptick in momentum that will really justify me utilizing Adam's principle of buying high and selling higher. It's just not there. That's not to say that it couldn't happen in the future, but now's just not the time. But I will say this, Cronos Group is going to be a stock I'm going to keep my eye on in the future because I certainly think it's a company that has a lot of potential, and it could be one I could either place on the watch list or come back and do another weekly update and discuss how it is possible now that Cronos could be a buy for you in your investment portfolio. I really like both these companies, and I don't think really you could go wrong with either of them or both of them in your cannabis portfolio. Price really isn't a mitigating factor here. They're both priced about the same, and their share price growth prospects are also about the same. Just keep in mind, Curaleaf is a much bigger cannabis company than Cresco, and their gains may not be as big, but they could be better sustained. It's aggressive, and if it's successful, it could position Subversive to take a large market share in the world's biggest cannabis market. And because it's a SPAC, your losses are virtually non-existent. If the SPAC doesn't complete the merger, you basically get your money back. You put in $100 and they don't merge with anyone, they liquidate, you get your $100 back. It's really kind of a no-risk proposition. Now, to me, there's a lot of upside potential here to Planet 13. I think the price target of $6.15 may be a bit low, but it's not going to hit it until after we're past the pandemic and tourism starts to ramp back up. But once that happens, though, I think Planet 13 is well positioned to make a good run of up to $6.50, even a $6.75 a share in that range.